Hey everyone, what's going on? Hayden Crabtree here. Super excited to be doing this video with you where we're going to talk through how to read a settlement statement, sometimes called a closing statement, other times called a HUD, H-U-D. And so they're all the same thing, and the intention of this video is to teach you guys how to actually go through and read a settlement statement, because first-time real estate investors or even second-time real estate investors, these can be kind of overwhelming. They have a mix of accounting, and debits and credits and trying to understand where different sources of money come from. So I have a real treat for you guys today. I'm going to share my screen. I'm actually going to walk through two different settlement statements. The first one that we're going to walk through is for a rental property that I bought, and the other one is going to be for a storage facility that I sold. So we're going to get to see both sides of the coin, right? We're gonna get to see where I'm buying. I'm gonna show you how it works for me, how it works for the other party, how all the numbers flow together. And then we're gonna see where I'm selling, how much money we're walking away with, where those numbers come from, etc. So if you're ever buying a property, and this is really a resource video for my second book, and we talk about the process of getting from contract to close, with that last step being reviewing the settlement statement and actually making sure everything checks out, understanding how those numbers flow. It's really important. And in fact, what we're going to see here today is that these things can often get revised, and you can have some input in there to make sure that they get done the right way. So if you guys are coming from my second book, welcome. I'd love to have you subscribe to the channel. If you haven't come from my second book yet, I'd love for you to get that, or I'd love for you to get a copy of my first book, Skip the Flip, Secrets the 1% Know About Real Estate Investing, absolutely free. Links in the description. But all that aside, I'm here to provide value to you guys. I want you to get a lot out of this. So let's dive in, and I'm going to share my screen, and let's do this. So listen, settlement statements, what are they? Are they complicated? What do I have to know? Do I have to be an accountant to read it? No, absolutely not. And what we're going to break down today is how to go through that and how to read that. So the first one we're going to start is the settlement statement where I'm actually buying a property. So let me share my screen with you guys, and let's walk through this together really slowly. So we can start up here in pretty much the top section, and I had to blank some of these out. I had to blank some information out just for privacy, other people's privacy. So these black, I'd love to share all the information with you guys. I just want to respect other people, and I don't want to put other people's information out there. So I'm going to black it out. If you see anything black, it's not that you need to know it. It's just other people's sensitive information that I want to respect. And so don't mind the black spaces. They're not really important. I left all the important numbers in here for us to go over together. So we can kind of read through here. We can see section B, 1, 2, 3, 4, 5, 6, 7, B, 6, 7, 8. And so, as we go through here, sometimes we'll have different labels. We'll see, reference to section J, line 100 or 106 or 108 or whatever that is. But what we're going to see here is the name of the borrower. That's me, Hayden Crabtree. Next, we're going to see the address of the seller, the lender name who gave me a loan, the settlement date, the settlement agent name who's the attorney, the property location, place of settlement, which is where we closed. All of this is just kind of formal. Who's buying, who's selling, where's it happening, when's it happening, right? And so the next thing that we kind of want to go over, there's two different sections here. The left side here is the summary of the borrower's transaction. Borrower's transaction, I am the borrower, I am borrowing money from the bank, and I am also the buyer. The other side, so this is J over here, the other side, K, is summary of seller's transaction. So these are all the numbers that are important to me. This is where I'm getting money from, where I'm spending money, and how much money I'm gonna have to put into closing. And then this side over here is for the person who's selling me the property. So this isn't really important to me at all. This is kind of serving them. And as we can see, I bought the property for $169,900. So that's line 101, contract sales price, and then settlement charges to borrower, $4,937.38. So this is other money I'm getting charged that was outside of the purchase price. We're gonna walk through this, okay? And so as we're gonna go through $4,937, we see we've actually got two pages here, with the second page being all about me and the money that I'm getting charged, okay? So at the bottom here, we can see $4,937.38. Again, we're gonna go through all this together, but this is the amount that I got charged, and that's where it's pulling from, right? So that's a total of all the other charges I'm gonna get charged. Now, as we go through, we're gonna look at adjustments and prorations. County property taxes, city property taxes, and there was a mobile home on this property, so mobile home property taxes, or not property, but just mobile home taxes. All of these are adjustments. And so what that means is the seller owned the property, okay, but they didn't own it for the full year. I bought this property in 2018, and so they didn't own that property for the full year, and therefore they shouldn't have had to have paid all the property taxes. And I didn't own it for a full year, so I shouldn't have had to pay all the property taxes. So this is proration, meaning I'm going to pay my fair share. Bought this on 9/27/18, so my fair share of the property taxes from here, from 9/27 to 12/31, is $542. Okay, and that's how much the seller paid in advance. The person selling the property paid that amount, and I need to pay them back. Okay, same thing for the mobile home taxes there. So what this means, we're going to add up the purchase price plus the other charges plus the tax prorations that I need to reimburse the seller, and total I'm going to spend $175,403 on this property. Okay, so that's the amount of money that I have to come to the table with in order to buy this property, except one quick thing, which is I'm going to have a loan on this property. Somebody's going to give me a loan, so I don't have to pay for all that money, right? So the loan that I got on this property was $127,425. So the bank is paying that amount for me. If we see right here on line 200, it says amounts paid by or in behalf of the borrower. So who's paying money on behalf of me? I like that when other people pay on behalf of me. So $127,000 comes from a new loan. Let's see what else is coming here. So there were some security deposits on the property that got transferred over to me, and there was a rent proration, right? Rents, people paying rents throughout that month, and so the seller owed me some money for rents that are going to occur in the second half of that month, whereas people have already paid that. So $229 coming there, a full credit for the security deposits coming there, and so the total amount paid for by other people on my behalf of buying this property, $131,252. $131,252, right? So again, the total amount that was due was $175,000. The amount paid for by other people was $131,000. And so what this section right here, $300, it's going to show how much money I need to pay. So we're going to take the amount from line 120. You can see here it references line 120. And so 120 is $175. That's the amount I have to pay. Less, when you see less, that means minus, subtract, amounts paid for by others, line 220. So that's $131,000 there. So the amount that needs to be paid minus the amount other people paid for me, and we're going to have a cash from borrower of $44,150, right? So my down payment on this property was $44,150, okay? And so that's how I would read this section, but I would want to make sure that everything is correct. And in fact, this is not correct. I didn't buy this property in my personal name. I bought it through an LLC, so I had to get that changed on here so that it was legally correct, right? I also want to go through and I want to check everything else of where that $4,937, make sure everything was correct. So whenever we come through here and we read, this was an off-market deal. There were no brokers involved, so there were no commissions of any kind, but if there were commissions, they would have been listed here. We had origination charge that I had to pay the bank for the origination of the loan, had to pay an appraiser $625, flood insurance, monitoring, and flood certification, $2, $12. I had to pay for home insurance a full year up front, so I had to pay for $679 of home insurance. I didn't have any of these other items that I had to pay for. Okay, I had no HOA dues or any of that thing that I had to pay for. I'm not escrowing anything on this loan, so I didn't have to prepay any of that. But sometimes that is normal. If you're buying a personal property, they'll require you to put in, 3 months of escrow up front, something like that. But I didn't have any of that here. But it is normal to see those kind of things. You just want to check the calculations, make sure everything's correct, make sure you're not getting overcharged for anything. Then we can go through and we can start looking at title charges. So title services and lender's title insurance, $908 here. Settlement or closing fees, $575. Owner's title insurance, $490. Lender's title policy, $333. And then we come through, we have $200 for title insurance. We have some other fees that were charged to the seller, and then we have some government recording charges, which is just making sure everything's up to date in the government's books. We got to pay them to process that. Transfer taxes that the government charges us, $552. Okay, and then we can see that there's some titles and affidavits and all of these other things that have to be paid that are charged to the seller in this case, and then future release fee, $24, and then pay in for courier fees, things of that nature, $90. And looks like the seller 1031 out of this property, therefore had to pay for some 1031 fees. So out of the other charges, they got charged $747, which is reflected right here, other charges that they had, and then I got charged $4,937, which again is reflected up here. So as we see this number, if we're like, where does that number come from? We can dive deeper into it on this next page, right? So this is walking through buying a property. You know, this is how it's done, right? You want to make sure that you're getting charged the right amount. You want to make sure that the seller's paying for what the seller's supposed to pay for, that your taxes and your are getting prorated, that you're getting credits on security deposits, that you're getting prorations on your rents, everything of that nature. So this is how you would go through and read. Again, you just want to kind of read the heading, see how this lays out. This isn't exactly how every single HUD is going to look. A lot of these are similar. This is how all the same numbers work. This is a really great layout. Sometimes you'll see some a little bit different, but this is, for the most part, exactly what you're gonna see, right, is this layout right here. So we could kind of run through this for the seller, kind of see how the transaction looked for them. They sold it for $169. They got some extra money coming in from me for the property tax proration, which they've already paid. So total amount that I needed to pay them was $170,465. Plus they had some charges, $747. They had a loan here of $61,974 that they needed to pay off. They had some other property taxes that they needed to pay, and they had some security deposits and rent prorations. And so essentially what this shows us is the amount of money that they had to pay to other people, and at the end of the day, they walked out with $101,755. And so I bought the property from them for $169, call it $170. They had a little money coming back to them for paying off property taxes, and then they had to pay their bank off, and they walked out with $101,000 going to a 1031 to buy more property, right? So this is how you read one that I'm buying. Again, if you have any questions about this, drop a comment below. Happy to answer any questions. The other one I want to show you is where I was selling, and it's actually from a different company. So I want to show you guys that real quick. So this is a property this is the storage facility that I sold, and I had some partners in this deal. And so here are me and all my partners. I had 1, 2, 3, 4 partners. Here's me. I sent my money to a 1031 agent, and that's why it reads independent trustees for Hayden Crabtree. But let's walk through this real quick, right? This is only, so it's a little bit of a different layout. There's no 2 pages here. There are 2 pages, but it's not referencing anything else. And this doesn't have the buyer side on it. So this is just another format that you may see. But here's how it goes, right? First sale price, $1.761 million. I had to do some credits here to the buyers. And so I had to pay them. There was some damage on the buildings. They wanted some trees cut back. You know, these are charges over here. These are charges. This is amount that I'm going to have to pay, and this is amount that's coming back into me, right? So I got $3,500 for accounts receivable. I think that was a rent proration. I can't remember exactly what it was, but they owed me $3,500 on top of the purchase price. That's right. I had to credit them $8,300 for prepaid rent. We had $1,200 of security deposits we had to get them. So again, seller charge, this is the amount that's coming out of my pocket, and this is the amount that's going into my pocket. So you'll see at the bottom here, again, if you just look at seller charge, seller credit at the bottom, these two balance out. We're getting charged and credited the same amount. And at the bottom here, we're going to see how much cash we walked away with, okay? So coming back here, had real estate commissions to do 2 different brokerages here. Kind of like in the last one that I just showed you, there's property tax prorations. And so these amounts right here are credits. So we had already paid for property taxes, and the buyer had to reimburse me for the property taxes already paid, in which they were going to not have to pay property taxes, but they were going to own that property in that year. So again, these are credits coming in towards me. And then we have attorney's fees, $6,800 I had to pay. I had a loan here, $500,000 was the outstanding balance. I had some interest on the loan I had to pay from the time that we were going over in that month. This is normal to have to pay a little bit of extra interest for that time period in between your last payment and your next payment of when you're actually going to pay the loan off. And then I had a 1% prepayment penalty on here. As you can see, $5,003 is exactly 1% of $500,000. We had some escrow charges, $250. We had some transfer taxes, $1,761. We had some different fees here, some going to me to help with the disposition, some other going to different contractors. So these amounts that the sellers got charged, my party got charged, and then funds held for recording fees after closing. So at the end of the day, we got paid $1.761 million. Had some other charges that I had to pay off here, totaling $60,000. And at the end of the day, after we paid off our loan, walked away with me and my partners for $1.149 million. So again, all of this went into a 1031. That's why it reads independent trustees for me. And that's important, right? Is where's the money going? Who's it going to post-closing? So that's why they want to do it there. If you guys have any questions about this, again, this one was a little bit different than the last one, because on the last one, if you remember, and we can see here, they had the summary of borrower's transaction and summary of seller's transaction on the same page. But in this one right here, this is all just seller. There's no buyer here. So they would have a separate one of these in the same format for the buyer. So if you guys have any questions about this, I hope it was helpful. I hope this can help you read and analyze your own closing statements. If you have any questions, feel free to drop a comment below. If this is your first time watching my channel, hit that subscribe button, hit that bell, like this, share it with a friend. Trying to grow the channel, putting out more real estate investing content every single week, and I would really appreciate it if you subscribe, stay tuned, and got some sick value out of these videos, because I'm really trying to help people. My goal is to help 1,000 people buy their first rental property, change their financial future, and I want for you to be one of those people. So thanks for joining me. Again, thanks for subscribing, thanks for liking this video, and I'll see you in one of my other videos. See you then.